Hi, it's Stan Reinford, and welcome to this week's market update. Today is January 7th, 2026. Thank you again for all the great compliments and great suggestions, great conversations. Really, really appreciate it. So let's jump in. We have a lot of new people that are joining, and thank you again for those that are forwarding and sharing this to other people also. Really, really appreciate that. So let's kind of talk about the chart in general. So the higher we are in this chart, rates are lower. The lower we are in the chart, then rates are higher. So right now, if you look back here into September, you're going to see that, or I'm sorry, in October, you're going to see that we were actually at the highest of this chart, which meant rates were lower. And then we've kind of flirted with it a certain time, but now all the way over to the right, we're going sideways. So a green candlestick means that rates are going lower and getting better, or going sideways, which we're going sideways right now. A red candlestick means that rates are going higher and or staying sideways, which again, that's where we're at right now. We're riding that resistance line here. Again, waiting for some news that's coming out here with regards to Friday, the BLS. I'll get into that in a little bit. Let's talk about what's happening out there with the Fed chairman right now. Still has not been announced. The president had mentioned before the holidays that they were going to announce it. Remember, the person that's more than likely, well, first, Stephen Moran is leaving the end of January. His term, he joined in September. It was a temporary one. He filled for Adriana Kugler, who left to go be a professor at Georgetown University. So more than likely, that person is going to, whoever's coming in, has to be, especially if it's one of the Kevins who are not currently part of the Fed right now, when they're appointed, they would have to be appointed to an open spot. And that is the only way that they can actually be appointed to the chairman, because it has to be someone that's already on that board. So we'll have to wait and see which Kevin that is. But I can tell you, all bets are in that it is going to be someone who is completely opposite of Chairman Powell. So we'll have to wait and see what happens there. Let's talk about Fed chairman speeches right now, or Fed governor speeches. So Stephen Moran, who I just mentioned, he is looking for the most significant reductions. In fact, he's been the most dovish or conservative. He believes that the cut should be totaling 100 basis points. That right now, he argues that the current monetary policy is clearly restrictive and holding back the economy. Where Philly Fed Governor Anna Paulson thinks the labor market is weak, but that it will stabilize later this year. And she believes that inflation will moderate, and later this year, there could be room for cuts, not right now. Minneapolis Fed Governor Neil Kashkari said that the labor market has cooled. No question, he thinks that the 4.6% reading on unemployment the other week is a real one, and he believes that inflation will come down later this year also. Let's talk jobs. So ADP tracks 10 different sectors for jobs, 3 of which showed losses. The biggest losers were professional and business services, while the biggest gainers were the usual non-economically sensitive education, healthcare, leisure, and hospitality. On Friday this week, we can expect the BLS numbers. If you recall previously, I reported that the BLS last year had reported that from June of 2024 to July of 2025, that there were 1.93 million jobs created, where they later then revised it downward almost 25%, that there were only 1.5 million jobs that were reported. But then the QCEW, the Quarterly Census of Employment and Wages Report, revised that number down greatly, that they're saying that the real number is really 423,000 jobs that were created during that time. So that means that out of those, 3 out of 4 jobs were more than likely not real. So that's a big number. So hence, that is why there's more economics, people in economics that are calling for some sort of revision to get a better clasp on these numbers and everything. So we'll have to wait and see. So let's talk about housing. So one of the things that I can tell you right now that is trending in the news is that pending home sales is up as interest rates drop and there's more activity and things like that. And you're going to see that when interest rates drop a little bit here and we get into the newer year and we start getting into a little bit warmer weather, you're going to see more people getting into and going out there looking at homes. And that will more than likely cause more competition and possibly causing prices to rise. So it is a great time to get in. Let's talk interest rates. So right now, primary interest rates are hovering right around, for a primary residence, hovering right around the low sixes to mid sixes. Again, depending on down payment, credit scores, debt ratios, all these different things that go into making up an interest rate. Second homes and investment properties are slightly higher. Of course, refinances are generally a little bit higher than purchase mortgages also. So again, remember, I help those that are looking at buying or refinancing, whether they're moving up, moving down, buying a primary residence, second home, or investment property, and or taking cash out to do any number of things, consolidate, renovate, or renovation loans, home equity loans. I can help in all aspects. And there are a lot of loans out there that if you're unsure of your certain scenario, call me. I'll be happy to help you with that. So have a great week, and I look forward to talking to you next week.